financial problems, elder law, tax problems, business matters, divorce, personal injury, bankruptcy, your life, your reality. Life is complicated. There is the law and there is reality. Welcome to Law and Reality, sponsored by Thav Gross. Now here's your host, Ken Gross.
Welcome to this segment of Law and Reality. Our opening seemed to have disappeared, but
it's a closing now.
On this segment, we're going to talk about credit card debt and not planning, and the problem people have of not planning to live long enough. So the realism of the segment are there's two key factors interfering with your future. And these are the two factors that I think really impinge and have an impact on people. One is if you're carrying credit card debt on a long-term basis, and it's so easy to do, you need to think about the money that you're paying in interest over all those years, and that's gone. And if that money was instead being put into a savings account, tax deferred even better, over that long period of time, how much would you have? And the other factor that ties into this, and I found a good article that we'll talk about, is people are not doing a good job of estimating how long they're going to live. If you're 70, you're going to figure at 70 and you're in good health, it's going to be easy for you to say, I'm going to go to 95. But when you're 40, you don't think about whether you're going to make it to 75 or 95. And too many people build their mental plan for retirement thinking mid-80s. And a lot of statistics indicate that if you get past 60, 65, your chances of living well into your 90s are much greater. So what you have to do is we don't know when we're in our 30s and 40s where we're going to be, but to start off with a plan that's built on the assumption that you're not going to be around past 85 is a big mistake, because if you are around, you're going to need money to cover your expenses.
Well, that assumption is old school. It's based on the average life expectancies of individuals that were in their 40s when they were growing up in the 40s.
Yeah, but even now, when you look at the statistical charts on your life expectancies, and for the male, it might be 84, 85. All right, and that may be true starting at 0. But if all of a sudden you're 60, your life expectancy for you is greater than 84, 85.
I completely understand, and with that whole logic of preparing for your future and not being prepared to live long enough, the traditional idea of retiring at age 65 or 66 has to come into question. There are way too many people that are way too smart and still able to work into their mid to late 70s right now that we are just saying, oh, you should be retired. I think the model is changing, and especially for the millennials. Their model is going to be completely different than what we have expectations of.
I mean, I agree with you. I'm not quite sure where you're going with
I'm
this.
I'm feeding into being prepared to retire and being prepared to live longer.
I know. I'm
starting with our younger people not getting into credit card debt.
Yes, but you're making a leap and a jump to retirement, where I was really kind of focused on this. Is the question of when you retire is a question of you retire and now you're going to have even less income coming in, which I agree with you, and then you have to make that assessment. I think the general view is retirement is getting pushed back further down the road. People are going to live longer. They're going to retire later. Social Security is getting pushed back as to when you can collect it. What's going to be the amount, we don't know. But so I'm with you on this, Brian, from the standpoint that it's not a question of our younger people being brighter and therefore they don't need to retire. I think there's a lot of pressures. Number one is you're going to live longer. You're going to need more money. You're not going to be able to afford to retire early. What I'm saying is beyond that, if you don't control your debt and you don't accurately assess what your lifespan is, you're also not going to have enough money to live on. You don't want to, this is what you don't want to happen to you. You don't want to be 88 and have $2,000 a month of Social Security coming in, and your rent is $2,400 a month. Because if you're in that situation and that's all you have, you are dependent on your children. And your children may not be there to help you. That's the big problem.
Especially
Assuming you have children.
Correct. Or you become a ward of the state.
And or assuming that your children have the ability to be financially financially assist you, which may not be true because we've created a whole generation now of people who are making a whole lot less per hour.
All right. Now, let's talk about credit card debt as the first one, and then we'll talk about your options as you get older and how you think about that. Good article was just on the issue that we always talk about on the show is the economy wants a growth in consumer spending. This is what our economy wants because as consumer spending goes up, that creates jobs. Jobs lower unemployment. Wages are supposed to go up as we create jobs. The problem is if your consumer credit is going up in your household, you are putting yourself in debt. And as you put yourself in debt, you start incurring this interest expense, which is effectively usurping your ability to save. Now, the statistics, when we went through the recession, for the first time ever, consumer credit card debt started onto a decline. And it hasn't jumped up at a remarkable rate, but it's starting to climb. In August, it actually declined slightly, but in September, it increased at a 2% pace to $881 billion. What the economy wants is to see that money start going up at 4 or 5%. What I'm telling you in your household is that could be okay for your neighbors, particularly the ones you don't like. But for your house, you do not want your consumer credit balances going up.
So, Ken,
want them going down.
Is that figure based on balances going up, which means you're charging more than you're paying off on a monthly basis, or is it new entrants to the credit market?
No, it's a combination of both. But if your balances are going up, it's not just new entrants; it's incurring and taking on more debt. You get the available credit from the credit card companies, and then you charge it, and you don't pay it off. You also increase your consumer debt with the housing market, and with second mortgages, HELOCs, and with car loans. But the one that is really critical, in terms of fatal, is if you allow your consumer credit card debt to continually escalate. And we're going to come back. We're going to take a break. When we come back, we're going to talk about credit card debt and what is so bad about it and what the trap is. We'll be back after the break.
If you're retired and in a financial crisis, there is a way out.
It pains me when I see a retired couple exhaust their savings by paying credit card bills and for a home hopelessly underwater.
Thav Gross specializes in helping retired people in financial crisis.
You just can't keep paying until you're broke. You need to address the problem now.
888-235-HELP. That's 888-235-HELP.
We're Thav Gross. Our firm will solve your problem.
You like your job. What you don't like is the way your boss has been treating you. He's making comments about how you look instead of your work, and he's been touching you inappropriately. If you complain, is he allowed to fire you? Absolutely not. Unwelcome sexual comments, advances, and contact are illegal in the workplace. Make him pay. Gold Star Law is here to help you through your employment law problem, whatever it is.
Gold Star Law, protecting employees' rights. Call 1-800-WAGES-10 for a free consultation today.
Carrying too much debt? Resolve your debt. Call Thav Gross.
You don't need to be broke, and you don't need to hit rock bottom. If you have income and you're struggling with debt, dump it. Think about the next 10 or 20 years. If you do what the banks tell you, you'll have nothing to retire with. There is a solution.
Don't waste your future. Call Thav Gross. We're experts at eliminating credit card debt. 888-235-HELP. That's 888-235-HELP.
Every family has the family meeting, and we all know what that means. Dad's got dementia. What are we going to do? What's the care plan that the family has in place? Usually they don't, or they struggle with a care plan. When you go home tonight and you talk to your tax person and you talk to your financial person, say, what's the plan that you have in place? And as soon as they don't give you an answer, give me a call, because I can do it for you.
Tax problems are major problems. Don't let the IRS levy your wages and seize your assets. There is a solution.
Worth Ave Gross, our firm will solve your problem.
If you're behind on your taxes and owe money to the IRS, call Thav Gross.
We've been solving tax problems for 32 years. We stop wage levies, resolve unfiled returns, and obtain the best possible settlements.
Call Thav Gross today, 888-235-HELP.
All right, welcome back. All right, we're talking about credit card debt. All right, here's what is my take on credit card debt. The interest that you pay is your retirement money gone. Whatever, if you can set out a path and say, I'm never going to pay interest on credit card debt, and that money's going to go in the bank and save it, that can be a retirement account, and it can be a big account. What I see happen with people all the time is once you have the debt, you can't get out because the payment burden usurps all your cash. And here's how it works.
Well, it has to. I'm just going to say it has to do with wanting to make purchases before you have saved the money.
True. That's how you get there, and I completely agree with you. But let's just talk about for a second where once you're there, how difficult it is to get out. If instead of I have no money in the bank in savings, but I have $30,000 of available credit, and I owe $50,000 or $40,000 on my credit cards, so every month I'm paying $1,000 on the minimum payments on my cards, 2.5%. I have the $1,000, but I don't have $2,000. So I pay the $1,000. Maybe I pay $1,500. I'm paying down the cards a little bit as I go. But during the course of the month, I need to buy other items. The furnace goes, or I need to buy a shirt, or I need to buy a radio or a TV or something because the TV goes. I have no savings because every month I'm giving the credit card companies $1,500 a month. So how do I buy the TV? I have available credit. I put it on the credit card. I still make my $1,500 payments each month, but I don't have any cash. Nothing goes, and the credit card balances, even though I'm paying more than the minimum payments because I have no cash to buy things other than on credit, the credit card balances go up or stay the same. I never get out of debt. That's what happens with all of our clients. That's what happens with all of Americans who have a lot of credit card debt. That's the big problem. Once this happens, you can't get out of I call it the credit card trap.
So do you think there's a point in time, I'd say, when you carry some credit card debt, modest or maybe a little bit more, and the first thing you look at is how much did I charge this month? How much did I charge? And then you want to make a cognizant decision to pay that month at least what you charged, and then maybe some more.
It doesn't work.
Then at a point in time when you completely sort of ignore how much did I charge that month, and you only start looking at the minimum and how much you got left in credit, that's when you've jumped the shark.
Right. At the end of the day, it will never work unless you can go into a month-to-month basis where you spend no money. If you spend no money, then you can pay down the cards by paying more than the minimum payment and get out of debt. But if you don't have excess cash,
you got to talk about reality. If you spend 80% less than what you're accustomed to,
it's not going to work. You've got to get rid of the credit card debt. Let's do a simple example. Dave, the commercial we like to do, Dave's a nice guy. He's got $40,000 of credit card debt. He's paying 20% interest on the cards. That's $8,000 of interest a year. In order for him, what are his minimum payments on $40,000? It's going to be 2.5% per month. That's $10,000 a year. That's $833 a month. Assume Dave's in a 25% tax bracket because he's making $100,000 a year. He's got to make $13,333 to pay his taxes to net him to $10,000 a year he has to make in his minimum payments on his cards. $13,333 is 13.33% of Dave's gross income just going to make the credit card payments, and we've already said he's never going to be able to get out of the debt. If Dave can make the credit card debt disappear, and we can do that, if he can make it disappear, he saves $833 a month. At 7% interest over 10 years, how much is that? Do you know how much that is?
If I turn the
Brian,
page.
do you know how much that
It's
is?
$144,181.85.
Brian is a wizard when it comes to reading it out.
I know, it's incredible.
Calculator,
What
Brian.
time is Wapner?
No, Dave, not now. Dave, you're a nice guy. You listen. Over 20 years, saving the same $833 a month at 7% interest.
How much, Brian?
Do you know how much? No, Brian,
No.
do you know how much that will be?
You know, as I'm reading page 20 of the outline, it's $433,935.95.
That's a lot of money.
It is
And
a lot
that's
of money.
just getting rid of the
I wanna
credit
ask
card.
And
you
you know what? I want to point something out, though.
And
You
then we'll
said
go to
we
you.
can get rid of it. I want people to understand that there's multiple ways to get rid of this credit card debt. We can go through the process of debt resolution, settling the credit card debt for pennies on the dollar. Dave, a nice guy, as we've called him, may actually qualify for a Chapter 7 bankruptcy, even though he makes $100,000 a year, because we don't know. Does Dave have 4 kids? Does Dave have 2 kids? It's based on family size, income, and expenses. And or Dave may be eligible for a Chapter 13 bankruptcy. There are numerous ways to get rid of this debt so you can put that nearly $500,000 away in
There's
the bank.
4 ways. Let me identify them for you, and then we'll go right to you, David, with your question. Number 1 is a Chapter 7. If you can qualify, it's the cheapest, fastest way of getting rid of the credit card debt if you qualify.
Number 2?
Number 2 is a Chapter 13. In a Chapter 13, if your numbers work out the right way, it's an efficient way of getting rid of the debt, and you can pay very little on the dollars. But sometimes if you earn too much money, it's not a good solution. The third one is debt resolution, which in that case, if you don't qualify for bankruptcy, we can get you out of the debt. It costs a little bit more money in terms of how much you have to pay the credit card companies, but it's still far better. It gets you out in 1.5 to 2 years max.
Number 4?
Number 4 is win the lotto and just pay them off with
You
cash.
can't remember. Actually, I know what number,
That's number
4
4.
is. Number 4.
No, that is number 4.
No, there is number. Then there's number
That's
5.
my number 4.
Often, though,
What's your number 4?
my number 4 is, depending on the facts, and Brian said all the facts are not the same, it may be a combination of both 1, 2, and 3. You never know. It could depend on the tax year. It could depend on your income. So that's why you have to look at it globally. One thing I wanted to ask you, though,
that's a good
There's a kind of a
There are
number 4
combos.
with a star, an asterisk there, which is if you can't do any of the others, make it impossible or nearly impossible for the credit card companies to collect from
There's
you.
asset
We do that with
protection.
senior citizens. A senior citizen who's got credit card debt and he's only earning Social Security. That's the only income that they have coming in, and they have no savings. They can't garnish your Social Security check. So in that case, as long as you keep your money in a separate account that's
Right.
only Social Security, you don't have to
So
pay
we
them
take
anything.
them through a commingling analysis.
You need to
and whatnot.
monitor that situation in order to defend it and to keep track of it. But it's another way. They get nothing is what comes out in that case. It's a question of survival in that situation.
Absolutely.
We'll be back after the break.
Is the debt piling up? Struggling to get by?
It's all about preserving future income. Bankruptcy is one option. When it's right, it's the least costly, most effective way to save your home, eliminate a second mortgage, and wipe out credit card debt. But you need to address the problem now.
We help people with bankruptcy. Call the experts.
We're Thav Gross. Our firm will solve your problem.
888-235-HELP. That's 888-235-HELP.
Going from hourly to salary seemed like a good career move, but now you're working 60 hours a week instead of 40, and you aren't getting paid any of that extra time. You're stuck, right? Wrong. You can be on salary and still be entitled to overtime. If you've been wrongly denied such pay, you may be entitled to that and more. Gold Star Law is here to help you through your employment law problem, whatever it is.
Gold Star Law, protecting employees' rights. Call 1-800-WAGES-10 for a free consultation today.
Carrying too much debt? Resolve your debt. Call Thav Gross.
You don't need to be broke, and you don't need to hit rock bottom. If you have income and you're struggling with debt, dump it. Think about the next 10 or 20 years. If you do what the banks tell you, you'll have nothing to retire with. There is a solution.
Don't waste your future. Call Fav Gross. We're experts at eliminating credit card debt. 888-235-HELP. That's 888-235-HELP.
Every family has the family meeting, and we all know what that means. Dad's got dementia. What are we going to do? What's the care plan that the family has in place? Usually they don't, or they struggle with a care plan. When you go home tonight and you talk to your tax person and you talk to your financial person, say, what's the plan that you have in place? And as soon as they don't give you an answer, give me a call, because I can do it for you.
Tax problems are major problems. Don't let the IRS levy your wages and seize your assets. There is a solution.
Worth Ave Gross. Our firm will solve your problem.
If you're behind on your taxes and owe money to the IRS, call Fav Gross.
We've been solving tax problems for 32 years. We stop wage levies, resolve unfiled returns, and obtain the best possible settlements.
Call Fav Gross today, 888-235-HELP.
All right, before we go back to addressing Dave's problem, and I think, David, you wanted to make a point. You're not Dave, you're David, with this credit card debt. I'll do a couple announcements. All right. Seminars coming up on controlling your debt. Check our websites, thavgross.com, lawandreality.com for the next date and time of the seminar. You can also always call our offices, 888-235-HELP. The seminars address options, and options is what it's all about, figuring out what is the optimal way of addressing an issue with the goal of preserving income on a go-forward basis for you and your family. I'm a strong believer that you have to start at a young age and look long-term at the reality that says, I'm going to turn 75, 80. I'm going to, at that point, want to not work or not be able to work, and I need more income than what Social Security is going to provide for me. And unless I take the right steps soon, it's not going to happen, because I'm going to allow myself to give away my retirement by incurring debt that I shouldn't have and paying it all off over a 30, 40-year period, which is a fatal mistake. I want to thank our sponsors, Gold Star Law, Samasco Law, Trips Auto Shop and Collision Center in Jackson and Lansing, U.S. Staffing in Jackson and Lansing. We have a couple free reports, How to Save Your Home with Regulation X, The Hidden Secrets. Go to regxhomesaver.com and we'll email you the report. And Pat Samasco has a great report on Retiree's Guide to Social Security. Go to ssifreereport.com for that report. All right, back to Dave and his credit card debt situation. What were you, David, you wanted to make a point.
Well, my point was that one of the assumptions was a $40,000 credit card balance that was ticking at 20%. And when we were offline, I asked Brian, well, is that what we typically see? And how do you get a card at a rate that high? How does that work, at least based on your experience?
Well, yes, it is typically what we see. And while we always like to have that low interest rate credit card, what you find is that as the consumer maxes out one credit card, they need another one. And so that first credit card might have been at 12.9%, but the second one's at 15.9%. And then the third one's at 20, and the fourth one's at 24.99, and the fifth one's at 29.99, because they're not looking at the interest rate. They're just looking at feeding the machine, feeding the animal of incurring more debt. And you incur the debt faster, and it ramps up, and it goes faster and faster and faster until it's completely spiraled out of control.
And I do want to ask you one question. This comes up all the time when we talk about credit cards and we talk about bankruptcy. If someone files a bankruptcy, do you typically find that the credit cards all get put on the hold by the lender, even ones that are fully paid or have no balance or that are not in default? How does that work?
Well,
if you file
a bankruptcy, you have to include any debt that you owe to any lender. If you have a credit card,
suppose you have a credit card and you don't owe them any money.
Well, the reality is that there's only a few major credit card companies in the United States, and so first of all, if you wanted to keep out your Home Depot card, which is a Citibank card, but you owed Citibank, you're still going to notify Citibank of your bankruptcy. That's one problem. So that card is probably going to be eliminated, and the ability to
So in
use
most
it is gonna be
cases,
eliminated.
they're eliminated.
That's correct.
All right. While we're on this, because it goes right with your question, is I'm saying,
But credit can
eliminating
be
credit card debt.
credit
Let's talk
cards.
about
You
credit
can get them
score.
again.
Talk about credit score.
Well, that's the point.
Everyone comes in and says, "Well, what about my credit score?"
Credit
and
scores.
what's the impact on the credit score if you settle credit card debt or if you file bankruptcy?
Let's just assume that it's the same impact, a 200 to 250 point hit, which isn't really a true statement, but because it's not quite often that bad. But so what? It's a 250 point hit. Now
How long does it last?
That's the issue, and that's the question. You can rehabilitate your credit score in 24 to 30 months to get to the point where you're going to be eligible for decent car loans, additional credit cards. Now, we've talked about when you're eligible for mortgages, and the mortgage rules.
That rule is going lower and lower
Yeah,
as we go.
The credit cards are available.
Your
Mortgages
rehab
are going to
timeline,
be 2 years, 4 years, 5 years. It
I
depends
have
on
to tell
what
you,
they're.
I
they're
thought your
gonna say
rehab
this week.
timeline was too long. Like when we do debt resolution, this is where we're not filing a bankruptcy. In that situation, the typical hit on the credit score can be 100 to 125 points, and once the credit cards are settled, because then the aggregate amount of debt has gone down so dramatically, I find the credit score comes back up rapidly, where the hit is resolved in about a year.
It's a true statement. The credit score will come up rapidly, but then it'll peak out, and it won't reach it back into that 750
you're not
to
gonna,
800
you're not going
level
to get to
for a while.
800. You're going to be at 720, 730.
But with the new FICO 9 system that's going to
Correct.
roll out, your credit score will rehabilitate that much faster
Because
the
no longer will
the defaulted
report.
settled
Won't
debts
show up.
won't show up on your credit report.
That's one of the, and also on FICO 9, you also have less of a hit on healthcare bills too, which is kind
So
of an
what you're saying is,
interesting outcome.
post filing in that at least 1 year period, give or take a little bit, the odds are that you're not going to be in a scenario to take advantage of credit out there.
Well, no. Actually, that's not true. There are credit card lenders that will issue you a credit card
right away
after you're discharged in your bankruptcy. There are auto lenders. The subprime auto market is flying high right now. You can get an auto loan if you're breathing and making $150 a week.
The auto companies figured it out very early in the financial crisis. When cash is tight and times are tough, people are going to make their car payments before they pay their credit card bills and before they make their housing payments. So it's virtually, you almost always can get an auto loan.
And what it means at the end of the day is, after a bankruptcy or after debt resolution, you are free to rehabilitate your credit, and you will get it back fast.
We've run out of time. Brian, David, thanks for joining me this morning on Law and Reality. We'll be back next week. Thanks for listening. Thanks for watching.